As the market pops up on 10th January 2022, this marks our 75th weekly engagement. While the topics could have meandered, we have kept the 5-minute time barrier sacrosanct. While you might have drawn a sense of pride in being a taxpayer, whether a diligent one or an indignant ratepayer, well, I leave the choice to you. But suddenly, you realize that you are being pushed from the elite to the economically weaker section with an annual income of 8 lakhs per annum. Are the government and the Reserve Bank hand in glove in destroying your wealth? Relax, you are not alone. In the US, 50% of the population, the lower earning groups, own less than 3% of the wealth of the nation. And over the last 100 years, their share has been below this 3 integer and declining. With the liquidity infusing spigots being used as a funnel by central bankers all over, your tryst with inflation stares starkly on your face. We have discussed, besides the US, the rising yields in UK, Canada, Australia, and even in Lebanon. The rising yield in the German bonds could be another interesting point, though it is in the negative territory. From a minus 0.40%, it has climbed all the way up to minus 0.06 and could soon surface into the positive territory like a submarine. Immediately after the FOMC minutes, the US benchmark 10-year sovereign yield spiked to 1.72 and could very well test the resistance at 1.77. Over the week, the Nasdaq has shed 4% and gold has declined to $1,792 per ounce, while Brent crude rose to $82.50 per barrel. The Indian rupee at 74.34 has been range bound over the week compared to last week's closing of 74.30. The Reserve Bank's reserve dollars has declined by another $2 billion, 633. With no evidence of a continuing trend of FII pullout from the markets at the beginning of the first week, as well as Reliance Industries demonstrating tremendous confidence in the international markets to raise $4 billion of long-term debt, 10 years to 40-year tenor. The immediate depreciating pressure on the rupee could wane. Week over week, the Nifty gained 2.60%, while the volatility index for derivatives, VIX, was elevated at 17.6. The rise in volume trade as well as the higher open interest in the index options could bear some correlation to the rise in VIX. When US Treasury yields have risen by 22 basis points, can the Indian bond yields buck the trend? Both the benchmark 10-year yield and the 3-year IRS swap points rose by identical 9 basis points during the week to 6.54 and 5.34, 5.24. So have an interesting week ahead.